Hi guys, it's Pete here. So I want to do a very quick video on talking about the market. Where do I see the market going? And there's a few things to consider, right? One of the key things is that right now we are seeing that the bond yields are gradually rising. Okay, that is slowly picking up. Now, I don't think this is just a rate hiking cycle. In fact, this is our first pandemic recovery that we've seen, I think, almost in a few decades, with extraordinarily high level of sovereign debt and very cheap energy before the last year, and even cheap commodity prices like metal. So for those of you who are not very sure about how to look at the market, let me just make it simpler for you. I truly think actually the Federal Reserve right now is actually doing the wrong move by tightening the market. Why do I say that? Because by tightening the market and yet they still carry so much sovereign debt, it just means that they have nowhere to get out of the situation, right? They increase the interest rate so high to keep paying the interest rate, and guess what? They are not able to buy back the sovereign debt because they have tightened since then. So my alternate thinking, it may not be correct, is that they should actually let the inflation run higher, right? Why? Because when there's a higher inflation, it allows the GDP to go up in general, okay, and allows the government to buy back the debt, right, with increased GDP. So it allows a deleverage to happen. And we are seeing that right now happening in the market, is that the dollar is climbing, right? So with the tightening happening, the US dollar is shorter in supply, it is climbing in price, and if the US dollar keeps climbing, the equity market is going to drop even more. And guess what? The market is a very sensitive market. The Federal Reserve is also very sensitive to the market. So when the market drops, the Federal Reserve is going to react accordingly, right? They're likely going to tighten, and then when they see the market react so negatively, they're going to loosen again, just like what they did back in the 2015-2016 period. And seeing that, the key thing is that the Chinese are also lowering rate while the US is increasing rate. So what's going on, right? So if the Chinese is still loosening while the US is tightening, what we will see is that the US dollar is going to keep rising and rising and rising, and it's going to make it really bad, okay? Really bad for investors. Now, when the US dollar keeps rising, guess what? More investors are just going to not want to buy treasuries, okay? Because it doesn't make sense to buy treasury bonds when the US dollar is going up. But that is when the Federal Reserve wants to delever, right? They want to actually sell away the treasury because they have been buying so much. So I would say overall, I don't think the Federal Reserve is going to do the right thing by tightening the market. So just keep a watch out. I think the market still has a bit more room to go on the downside. Do look out for the bond yield inversion between the 2-year bond yield and the 10-year bond yield. I think that is going to be really critical to signal to you when the next crash is going to come. But having said that, I still position myself with a lot of good company stocks, options, cryptocurrencies, and cash, right? That is my main position right now. And of course, property is one big inflation hedge that I'm having that's going to tide me through the process, because property is just less volatile in this case, right? One thing about Bitcoin is that it is still currently a risk-on asset. That means it moves very similarly with the stock market. Now, I do think that correlation eventually will disappear, right? BTC should behave as more of a safe haven asset in the future. And that's something like the big investors out there like Bill Miller are saying, right? In fact, Bill Miller just recently announced that he has actually half of his private holdings in just Bitcoin, right? For what it's worth, the other half is Amazon. So he's basically saying that, hey, the US government has to backstop this, right? Because of the high debt level. So I don't know. I don't know what's going to happen. I do think that the US government will be a lot better off if they just let the inflation run hot and they allow the US government to delever by buying back, by selling away the treasuries. But if they tighten, the US dollar is going to continue to rise, and no one will want to buy the treasuries, and guess what? They are unable to delever. So let me know what you think. I think this is a very quick spill on how I look at the market. It doesn't change the way I invest, but it just helps me to understand and to kind of tolerate the volatility going forward. Okay, so I hope you guys find this useful. Press subscribe button, share this with your friends if you find this useful and can help them in navigating the markets. And I'll see you guys next time. Bye.